everybody, it's Mike Smith from Hawkeye Options here, and delighted that you've joined me today for today's trading tip. I trust you had a good weekend. We thought we'd look at USO, the ETF which holds all futures. We've got an interesting chart going on here. A few things to say. First of all, obviously we had this wide bar last week which was subsequently topped, and you'll see we've moved into Hawkeye uptrend with buying volume and a bright green heat map, which sort of indicates that it might be time to get in to this on a daily chart, just taking those parameters. There's a couple of things that would raise a little bit of a red flag. We have got buying volume on the 2-day. You'll see we've sort of we didn't actually move past Thursday's high on Friday, although we did challenge it, and that corresponds at $11 mark. It looks to be quite significant. If we move across here to the high in early September, we've hit the same point. So we've got almost a double bottom type of formation on the daily chart. But note also we've got pivot highs around about 1140, which was our mid-August high. We had another pop at this a little later in August before we had this downtrend, and you could almost say that this longer picture is more a reverse head and shoulders. There's your shoulder, there's your head, and there's your second shoulder. So whichever way you slice it, 1120 looks to be crucial. This sort of corresponds to around about $50 on the price of oil. So we're a little reluctant to dive in because of this. The other reason we're slightly cautious is, of course, on the weekly chart we are still in downtrend. We're likely to see this turn green today with it closing its high of the week on Friday. And those three things there would put it all into uptrend. So how would we play this? Well, logically, if we're not happy with the upside, there's a limited upside potential at this stage, then we could look to potentially placing a spread or a bought call, trying to scalp some premium off here. Or alternatively, we could look at the pivot lows we see here, just below that $10 mark, around about 985, and potentially place a longer bull put spread, $10 and 950 strikes, perhaps out 3 weeks. That would be a more risky trade, but nevertheless looks probably the best way to trade USO. I trust that's useful, some interesting things to think about there, and we'll catch you again very soon. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and training service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.